Interest rates have more than doubled this past year, landing a blow on a historic pandemic-era housing boom. Some experts are saying the chill could become an all-out freeze by next year if these interest rate hikes continue. And here to discuss where the market might go in 2023 and where it has been is Dennis Rodkin, a residential real estate reporter for Crain's Chicago Business. Dennis, always great to see you.
Hi, Paris. How are you?
I'm doing well. Good to have you here in person.
Thanks.
We've talked via Zoom a few times. So in your most recent article, you say that Chicago's housing market is in a, quote, holding pattern heading into 2023. What do you mean by that?
Well, the primary thing we don't know is what's going to happen with interest rates. They went up, as you mentioned. They doubled in the course of the first 10 months of the year. They've come down a little bit. The Federal Reserve has already said that maybe it's been a little too much. So if interest rates continue to go up as steeply as they were, then we probably will see quite a deeper freeze on the housing market. If they pull back on that a little bit, maybe we get some breathing room.
And you created a chart that shows fast sales of 2 weeks or less, where the house is just on the market for a couple weeks. They virtually disappeared. They're under 10% after hitting a high in 2021. What are the implications of these numbers?
Well, it really means that if your neighbors were selling their house last year and it went off the market in less than 2 weeks, you should not expect the same. At the time, you were thinking, wow, they're sold in 14 days. Maybe mine will sell in 12 because things were getting faster. Things have slowed down so much. Sellers in particular need to be aware that most homes, houses and condos, are sitting on the market far longer than they were. The pace was furious for so long, and the brakes went on when interest rates went up.
Although Chicago is in a better position, as I understand, than a lot of other American cities because the simple fact that the prices didn't rise quite as fast here as it did in other cities.
That's true. While our home prices went up quite a bit during the boom, they didn't go up anything like what was going on in Phoenix, in Seattle, in San Francisco. So there's not as much air that was pumped into those prices and not as much to come back out. Some of those places have started to see prices fall. We're still seeing them grow just by much smaller amounts. And we also, because our prices didn't go up so much, we're a very affordable city. Among big cities, we're one of the most affordable for housing because, again, our prices didn't go up as much and our salaries did. So we're in a really good position going into 2023. The question is going to be, is there demand for these homes?
Although if you look at the month of November, year over year, prices went down, sales went down. Do you anticipate that trend could continue into 2023?
Prices went down only in the city. City sales, home sales, the median price was down over 6%, but city sales are only 1 out of 5 for the regional sales, and the region's prices were still up just a little bit, about 1.5%. So the question will be, does the whole region go down? Does the city go down even farther? But yeah, what we're watching for is to see, do prices go down farther? Sales are down. The number of sales in November was not only, it was expected to be well below the boom, well below 2021, but it also, when I looked at the averages, we saw fewer homes sold in November than during the same time in the last 3 years prior to the pandemic. Normal years, 2017 to 2019, when we didn't have all the craziness that was going on in the next few years. That's a big drop. And so one of the questions is going to be, do people come back into the market? We don't expect to get sales back up to the level of the pandemic boom, but do they get up above 2017 to 2019? That's going to be a big question.
All right, so this dip in the city of Chicago, do you anticipate that's going to turn around and it's going to be more commensurate with the rest of the region, or could this continue?
It's hard to say. Prices had been flat in the city for months while they'd still been growing in the larger region. And then suddenly there was this significant drop. So what I don't know is, what's December, January going to bring? Will it get back to being flat in the city? Will the decline be larger? But once again, that's 1 out of 5 sales for the region. So that for the city to drop the city would have to drop very dramatically to pull the whole region down. And we don't know what the region will do overall.
Although a lot of city residents are waiting with bated breath to see if those numbers here in the city improve, and then getting to a micro level, south and south suburban neighborhoods, they've been hit pretty disproportionately hard, have they not?
Yeah, so one of the things I had been watching, actually for about 10 years, but especially during the pandemic, is this rehab wave of foreclosures, senior citizens' homes, other things that had not been redone were redone by rehabbers, and there was huge demand for them. They were often in the first-time buyer price when they were put back on the market. They were in the 300, 350 range, and we have seen a dramatic chill on those sales in the last several months. We've seen a lot of those properties sit on the market. There was great demand for them. Now there seems to be less so because there are fewer first-time buyers in the market. And so one of the questions is going to be, where do those entrepreneurs who were doing that work go? Where do those laborers who were working for them go? What happens with the homes that have been rehabbed and don't sell? There's a lot riding on those homes in the south neighborhoods and South Cook County suburbs.
Certainly could be ripple effects for the entire economy. There is one segment that's doing exceedingly well, historically well. Tell us which segment of the market that is.
Unbelievably well, really, is the way at $4 million and up. Really, at $1 million and up, things are still going very well because those are people who generally don't really have to worry about interest rates when buying a home. But at the extreme upper end of the market, from $4 million up in the Chicago area, the average number of sales in a year prior to the pandemic was 51. In 2021, it went up to 101 sales, and so far with 2022 nearly over, we're at 133 sales at $4 million or more, nearly 3 times the average what was happening in the years before the pandemic.
And very, very quickly, what accounts for this is just the fact that wealthy people have more money to spend and are willing to purchase properties?
Stock wealth was driving it, though the stock market is down, and the other thing is, even at the high end, our properties are more affordable than those you might get in Palm Beach or Colorado or Palm Springs or wherever you're buying. So they're buying up. And if you're going to have a stake here, they want the nicest one they can get, and they're spending to get it.
I guess a silver lining there, but a lot of anticipation going into 2023. Dennis Rodkin, thank you so much.
Thanks, Paris.